Hey, personal finance gang. Here we are continuing our coronavirus quarantine. And in keeping with my stupid hat start off that I've begun, here I am now, still protected. Nice hard hat here. Actually, wear this for, got this for recreational tree climbing many years back, but it also doubles as a caving helmet with the light here. And well, I'm still looking for the light at the end of the tunnel, but I'm confident we'll find one. So let's get into this topic here, auto insurance. Not a topic most people are excited about, but a topic that most people do want to know about. So what we're going to talk about are types of automobile insurance, some coverages that are optional that you should have. There's some coverages that you're required by law to have, and then some factors that would affect the cost of auto insurance. So if you are going to drive, do you have to have auto insurance? The answer is in pretty much every state in the union, you do have to have some type of insurance, and we'll talk about what that is. And well, that's going to be liability insurance. We'll go into more detail on that. You should have a copy of your insurance card in your car, or I have the copy of the insurance card in my car, and I also have, let me see, a nice app through my insurance agent. You might check and see if they've got one of those. So I've got the nice little State Farm app. There's that State Farm app that has my insurance info on there. Anyway, couldn't connect to the internet. I don't know about you guys, but my internet connection has been lousy the last few days. Maybe everybody's using it or something. But anyway, so yeah, DSL is our only option here. AT&T DSL, not very good. It was all right before, but now it's kind of like lame. All right, so the main categories of auto insurance, we've got bodily injury and we have property damage. So bodily injury, obviously, that's pretty straightforward. That's harm to a person, and property damage. Well, property. We've got all sorts of property: your car, other people's cars, other property. And the bodily injury, well, we know what that is, but I've got more on that here. So, well, first, we're going to break this into different categories. Liability insurance covers you. That means it provides insurance coverage for you if you hurt somebody else or harm somebody else's property or damage somebody else's property. So there's bodily injury liability. So that's you're at fault in a wreck and somebody else needs medical care, or they're out of work because of the accident and they need that income replaced. They got pain and suffering, etc., legal costs. That's what bodily injury liability is designed to cover. So you're at fault in an accident and somebody else is harmed. That's where bodily injury liability comes into play. This doesn't do anything if you're at fault in the accident and you are harmed. Bodily injury liability is not going to help you there. Property damage liability, you're at fault again and somebody else's property is hurt. So could be their car, could be something else. This is what property damage liability comes into to play as. So this will not, you're in a wreck, it's your fault and your car's wrecked. Property damage liability does not help you here. If you're in a wreck and it's somebody else's fault, hopefully they have sufficient property damage liability to cover the damage to your car. If not, we have other stuff that can help us, but more on that coming up. So let's say you drive through a building. That would not be a very good idea. Or run over a street sign. One of my nephews hit some kind of roadside sign in New York. And heck, this sign ended up costing him big bucks. They charged, I forget, they said the sign was worth a couple $100. And then, of course, it's a couple $100 to pay someone to go out there and replace it. Like, geez, no wonder the country's in debt if it costs that much for a sign. But anyway, so if you run through a building, drive through a building, or damage a sign, are you covered by your property damage liability? The answer is yes, up to your policy limits. So this will be a case where you get to pick how much insurance you want and pay for it. Quick, think fast. What do we call the payments you have to make for insurance? Remember, those are premiums. So this is an example of one of the types of things that property damage liability would cover you for. Obviously, if you run into somebody else's car, that's going to be covered as well. So damage to their car, or etc. So there's also a medical payments coverage option that you can get. So this would be covering you or passengers in your car if you are injured. So this one is maybe an optional coverage for many people. I have good health insurance, so this isn't one I'm worried about, but this would cover some of the preliminary costs of medical treatment. These are generally smaller amounts, cover things like ambulances as well as also. So medical payments coverage is one that you might not get. Again, it's going to be an optional coverage through your auto insurance. Now here's how you'll see insurance quoted. And this is something I do want you to remember, hint, hint, exam coming up. You'll see something like quoted with 10/20/10 is what I've got up there, or 100/300/50. What the heck does this mean? The $100,000 in this 100/300/50 quote that's how much will be paid in bodily injury insurance per person. So if you're in an accident and you do $300,000 harm to one person, the max your policy will pay is just $100,000 per person. The $300,000 is the max in bodily injury liability coverage that your policy will pay, period. So if you are in an accident and you injure 4 people and do $100,000 worth of harm to all of them, each of them, so $400,000 total, your policy will only pay $300,000 in bodily injury liability. If you did $150,000 in harm to one person, that one person would only collect $100,000. So it's a max of $100,000 per person, a max of $300,000 per event. So we're talking every time each car accident you are in, these are the policy limits per accident. So this wouldn't be per year. Again, this is per accident. So health insurance is generally per year. Auto insurance is per event, which in this case with liability coverages per accident. So, if you're in 4 different accidents in a year, well, don't do that. This would come into play per each accident. So the 100/300, the first 2 numbers relate to bodily injury liability. The third number is property damage liability. So this means that your insurance in this case would pay up to $50,000 for property damage. So total. So if you hit 3 semis and a Rolls Royce and a Lexus all in the same accident, this is the most that your insurance will be paying out is $50,000. If you end up totaling somebody else's $100,000 car, the most that the insurance will pay out is that $50,000. So who is covered by liability insurance? In other words, who is protected? So if this is your insurance policy, you're obviously protected. But also if you've got other family members named in the covered under or in your household, you can name them as drivers and such, they'd be covered. If you lend your car to a friend, they're actually covered by your policy. So that's something to consider. So who is financially responsible if I don't have enough liability insurance to cover damage that I do? So this one's pretty straightforward. It's not easy to guess. If you're in an accident, you do $100,000 worth of damage to somebody's vehicle, you have $20,000 in property, liability property insurance. Well, you're responsible legally for the remainder there. You may or may not have enough money to pay that. The person who's had their vehicle damaged, could sue you, but it might not be worth their while depending on your financial condition. If your financial condition was such that you could pay, you might end up being sued. Or if this is America, you very well likely would end up being sued. So a suggested starting point for insurance, once you get sufficient funds to buy insurance while you're in college, you probably don't have enough money to pay for the best insurance, but actually I would probably start with 100, 300, 100. I believe right now I have 250, 500, 250. The average cost of a new vehicle in the US right now is 30-something thousand bucks. So if you, and this insurance, with car insurance, we'll talk about this, but if you damage somebody's car, you're not responsible for getting them a new vehicle. You're responsible basically for the current value of that vehicle. So if the car would sell for currently, if it was brand new at $100,000, it right now got a market value of 10, you're only responsible for the 10,000. So this coverage here, the 100, 350 or 100, 300, 100 exceeds the minimum state law requirements, but I'm going to drag this over here right now. These are examples of as of September 2019, the minimum insurance levels required by different states. So here, Alabama, 25, 50, 25. So 25,000 in bodily injury liability per person, 50,000 per accident, $25,000 in total property damage insurance. $25,000 doesn't cover the average new car. My spouse was in an accident. The medical bills went over 100,000. Let me scroll. We don't have to scroll here. Here's Florida. These are ridiculously low. 10, 20, 10. So $10,000 in bodily injury liability per person, $20,000 per accident, $10,000 in property damage liability. This is the amount of insurance that people are required to carry. So if you're in an accident in Florida, it's somebody else's fault and they're carrying the minimum, heck, this will barely get you anything in an emergency room. $10,000 in America. I'm going to charge you $100 for an aspirin. Well, that may be a tad bit exaggerated, but I'm having seen some of these bills, the amount they charge for an aspirin is not anything really low. It's pretty darn high. They're figuring the time for the nurse to give it to you and time the building, that's around you while they're anyway. So things add up real quick. So the moral of the story is, if you're in an accident anywhere, basically in the country and someone's got just the minimum insurance amounts, you better have your own insurance to protect you, because the minimums aren't generally enough protection in real life. More on that coming up. All right, now, so that was liability insurance that we just talked about. Liability insurance protects you if you are at fault and somebody else, either their body or property, are injured. Now, collision coverage, well, that kind of does exactly what it sounds like, is if there is damage to your car from an auto accident. So damage to your car in an auto accident. What if the accident was your fault? Will collision coverage help fix or replace your car if it's totaled and it was your fault? Yes, collision coverage comes to the rescue. So you're in a wreck, it's your fault, your car's totaled, your car's worth $20,000. Insurance company should come and deliver you a $20,000 check. Your car's in a wreck, it needs to have $6,000 worth of repairs. Insurance company, they're going to basically end up making the check out to you and the auto shop. They're not necessarily just going to give you the $6,000 and let you run, depending. Okay, so the insurance company will help make you whole in this case. But what if you say, geez, my car was brand new and it's wrecked, and all they're fixing it, but now my car's really not worth as much as it used to be? I'm sorry about that. Okay, but they're going to help fix it and put it, get it back into good shape and such. What if the accident wasn't your fault? It was somebody else's fault, but will your collision coverage pay to fix your car? Yes, in fact, it will. But, so I said, what if it was somebody else's fault? So the insurance companies may duke it out, but meanwhile, you're going to have your car fixed. So it depends there on how you want to cover this. It depends what's going on. Maybe the other party doesn't have insurance, in which case, hey, you're glad you've got this collision coverage that'll fix you. And mentioned it was, I don't know, it's been several years back now, where my spouse was in the wreck and her car was totaled. So we had collision coverage, but the other party actually had enough property damage liability coverage to replace my spouse's car. So we had a choice. Our insurance agent said, well, they would pay out and we could pay the $500 deductible that we have on our policy. More on deductibles later, but you should know what that is already. So, or we could let the other party's insurance pay and there would be no $500 deductible. Well, so that was a tough choice. Yeah, we'll not pay the $500 deductible and get the full value of the car. So we got a check from the other party's insurance. Just glad my wife was okay after that accident, although it was not a good one. So here we go. I wrecked my 2001 Toyota. Will I get enough money from my collision coverage to buy a new car? And by new, I mean, hey, give me a nice 2020 Toyota. Well, when we talked about home insurance, the type of insurance you want is replacement cost insurance. Hey, you want to be able to go out and buy new stuff. That's not going to be available with auto insurance. So your insurance company, what they're going to do is give you enough money to buy, or even if it's somebody else's fault, you'll get enough money to buy a used 2001 Toyota. So they're going to give you the market value of your car, basically. So the depreciated value, that'd be based on, what your car's expected to be worth, what it would cost you to get one just like that, for the most part. So what with houses, they're not expecting people to rush out and burn their house down. Now, that would be fraud, of course, to get a new house. But I'm guessing if we had replacement cost coverage on cars, there would be a lot more mysterious accidents. My car rolls off a cliff when I'm not parked in it or something. I wouldn't do that. But anyway, so yeah, so for the most part, what you can assume, you're going to get just what the car is worth. So that's collision coverage. Now, another coverage we have, so collision coverage, again, if you're in a wreck, will work on fixing or replacing your car. Comprehensive coverage is, hey, well, a lot of other things can happen to my car besides being in a wreck. So it could burn up in my garage. I hope not. Could get stolen, could get vandalized. Oh, glass break. Geez, I got a new car when we moved to Florida, and I was using a weed whacker, but I was plenty far enough away from the car to make sure nothing happened. Well, so I thought. And a rock flew up and cracked the windshield, it was a side window, real bad, of my brand new car. Not very happy. But anyway, so comprehensive covered that. In Florida, I'm not swearing to this, but collision, I'm pretty confident on this. I'm not an insurance superstar expert, but and rules differ by state. But in Florida, if you have comprehensive coverage, the rule is if you got damage to your front windshield, they'll replace that without a deductible. So no deductible applies if you've got damage to your windshield. They don't want people driving around with a big crack in their windshield and not being able to see. So that's why if you ever have damage to your windshield, you look around and you'll find a place is anxious to drive to you and fix it. That's what we had done. And there's even some, we'll drive to you, fix it, and give you a free box of steaks or something. Steaks being like the kind you put on your barbecue grill. That's sounding good right now. And anyway, so that's covered by comprehensive. With the State Farm, the coverage I had, they replaced the front windshield without a deductible, and they expanded, and they just replaced any old windshield or window, so I didn't have to pay a deductible to get my window fixed, but it did ruin the new car smell. So anyway, also, for example, the other things not associated with it, a wreck, hitting an animal that would fall under your collision coverage. In a hailstorm, tree falls on your car, etc. Hurricane, that type stuff, that would be under comprehensive coverage. With both collision and comprehensive coverage, again, these are for your car. Both these are for your car, not for the other party's car. If you're in a wreck, that's where the liability, the property damage liability coverage comes into play. But with both collision and comprehensive coverage, you pick a deductible. So a deductible, remember, is how much you pay before insurance kicks in. The higher the deductible that you pay, the lower the premium. So remember that. If you agree to basically self-insure for a higher amount, then you can lower how much you have to pay for your premium, the cost of the insurance. So if you wanted a $100 deductible, it means, geez, any little small thing, the insurance company kicks in, they're going to charge you a higher premium. If you accept a $500 deductible or so, that would lower your premium versus that $100 deductible. Now, insurance, what the coverage that the state requires you to have, all the states require you to have, is liability coverage. That's if you do harm to somebody else, it's to help make them whole. The states do not require you to have collision or comprehensive coverage. So as far as the state's concerned, you can drive around without having your vehicle insured. You may or may not want to do that depending on the value of your car and how much you can afford to fix, but the state does not care. The lender, if you have an auto loan, whoever made you that loan, remember your vehicle is their collateral. So if you don't pay the loan, they're going to come get your car. If you wreck the car, then they don't have anything they could come get. So imagine if you had a $25,000 loan on a car, you wreck the car, and you go, geez, bummer. Hey, no car. They want protection for their loan, so they will require that you have insurance to fix your car or cover it if it's stolen or something. So you're going to have this coverage if you have an auto loan. Now, I made this note in another part of the class. Your lender may say, geez, hey, you're having a hard time getting your coverage, or you haven't provided us. If you don't provide them with proof of coverage, and actually you're going to be, they're going to require, your lender's going to require that your insurance company has them on the policy. So if you cancel the policy, don't pay on the policy, or try to get a payout on the policy, the lender will be notified, and actually the insurance company won't pay you directly. It's going to, the lender will be involved if it's anything, like paying off the vehicle. But they're going to require that policy there. But don't let the lender, where I was trying to get there before I got lost in the dark because I didn't have my light on, but the lender's going to, now see, this actually does, in case you were wondering, this has two light choices here. So if you want wide angle viewing, I've got two bulbs and it's got adjustable brightness levels. And then a more focused beam. So I think that blinking was a signal on my battery life, which may be getting low on these. I need to recharge this. Don't worry, I'll do that before I go in a cave, and I'll have backups. Always have backup batteries. Anyway, so your lender, if you don't have proof of insurance or your insurance gets canceled, they're going to automatically buy you some coverage, and it's going to add it to your loan payments or your loan amount here. And it's going to be overpriced insurance for the highest risk individuals. So it's going to be priced based on if you're in the highest risk category, and the bank, it's going to be priced such that the bank's getting a cut of this most likely. So you do not want insurance provided by your lender. Now, let's talk about some specifics here. Your car stereo is stolen out of your car. Are you covered by your comprehensive policy? Probably not. There are exclusions for some things that are easier to run off from your cars, and stereos are typically one of those. Let's say you've got an older vehicle and it's only worth $700. Is it worth it to carry collision and comprehensive insurance? And if you're going to pay a couple $100 a year to insure something that's only worth $700, and you got a big deductible, you got a deductible as well. No, this is something I'd skip. Remember what we have, hopefully, once we've been out working for a while, is that rainy day fund. So again, that $700, imagine you've got a $250 deductible. If you paid $200 for collision insurance and then have a $250 deductible, at most your insurance will pay you just a few $100. So now once you get down, you should periodically go to one of the sites like KBB.com, that's Kelley Blue Book, or MS CarPoint or whatever, some of these cars.com, and find values of your vehicles. And once it gets down to a point where you go, geez, it's only worth this, and I'm paying this much for coverage, I think I could afford to replace that little bit or that bit, or self-insure for that bit, then cancel the collision and comprehensive. But again, you want to see what you're paying for it and see what your car's worth, etc. So now I showed you the required insurance coverage by state, and the Florida required insurance is pitiful. So someone who has just the minimum insurance in Florida has $10,000 worth of property damage insurance. And so if they hit your new Lexus, or if my truck was brand new, it's worth a little, I think it was like $32,000. It's actually below average, below the cost of the average vehicle. Now it's got a few miles on it. But if they'd hit my truck when it was brand new, and they've got $10,000 worth of coverage and no assets, wow, what am I going to do? You have your comprehensive insurance, which would pay for one. If they also hurt you, actually the uninsured motor vehicle is not what would come into play here. That would be your collision stuff. But if they hit you, the bodily injury coverage, is what would matter here. I'm out of work for a period of time because they hit me. Then that's where this uninsured motor vehicle coverage would come into play. Or if I have injuries that isn't covered by health insurance or whatever, that's where uninsured motor vehicle coverage would come into play. And yes, this is a coverage you want. So again, like I said, if you're out of work and they only have the $10,000, $20,000, forget that. I was off in a mental side channel when I was talking about property damage there, because that's where your collision coverage comes into play. But their bodily injury coverage is not sufficient. This is why you have this uninsured motor vehicle coverage. It covers you and the people in your passengers in your car. So we said how much, when we talked about minimums for coverage that you should ideally have, you want the same kind of coverage for uninsured coverage. So have at least 100, 300 for this uninsured, underinsured coverage. So that means if you're in a wreck and you've got this 100, 300 uninsured, underinsured coverage, if they have that paltry $10,000 of bodily injury coverage, you've got an additional $100,000 in coverage per you and per passenger, and a max of $300,000 for the accident. Ideally, you would go with even the $250,000, $500,000 coverage once you up your regular insurance, so that you're covered. You can have, one wreck can do a lot of damage. It's kind of bad, and that's another reason for having that insurance that covers you if you're disability insurance. It covers you if you're unable to work. So out of work for a while, you'd have this coverage and the disability insurance. And I've got a note here, this coverage can be stacked. So if you had 100, 300 on one car and 100, 300 on another car, or you can double that up, or just get the 250, 500. Don't worry so much about that. So here you go. Your car's in the shop while it's getting fixed. Will you get covered for a rental car while the car is being fixed? Now it's different. If it's somebody else's fault, that's where they would have their coverage that should be kicking in to help you with that, with their coverage. If it's not their fault, they don't have coverage, or they don't have coverage, this one here is an optional coverage. Your insurance company won't pay you if it's your fault. and you're in a wreck and your car takes a couple weeks to get it fixed, the insurance company won't pay for that unless you get separate rental car coverage. So one time this is a sad story, I had a different truck. It was a couple trucks back, and I was on actually away out of town on a business trip or conference or something, I don't remember. And there was one of those big yellow pole in a Walmart parking lot, and my wife turned right and said she thought she heard something or noticed something, and went down the whole passenger side of my truck, both doors and the whole everything, scraping along that big yellow pole. And she said it wasn't a visible yellow pole. And then when we drove later, and she said, "See that pole? You wouldn't notice it." I'm like, yeah, if you were blind. But anyway, so my car was in the shop for, you're not supposed to touch your face with the virus, but I haven't touched anything lately. Sorry, I was just had an itch, and here I'm going to do some more hand sanitizer. Hand sanitizer cologne. But, it's strong. But, so that was where I didn't have rental car coverage, and so I'm cheap. And we had her vehicle as well, but then driving together to work in different directions didn't work well, and ended up having to get a rental car. And I tried putting it off again because I'm cheap, but now I just get that rental car coverage so that I don't have to worry about it. I worry about trying not to drive anywhere or whatever. Anyway, so yeah, this is an option. You only have it if you pay for it. If you need towing, your car breaks down on the side of the road, need to get towed to a repair shop, are you covered? This is another one of those optional coverages. And this is one, it depends. You might be just as well off putting some money in your emergency account saving up for this. If you have something like AAA or a new vehicle, some of those come with, hey, you got a warranty for towing you if something happens to your car your first 3 years, 36,000 miles, so you wouldn't need this. But this is one of the ones where, maybe not. So look at the cost, see how much it would cost for a tow truck, and maybe get it, maybe not. So here's one. This is an example of someone's bill here, and this would be, typically I pay my insurance every 6 months. So this is May, June, July. Yeah, so this is a 6-month one. And this particular one here is for a Ford Taurus. I gotta scratch my nose again, sorry, but I just did the sanitizer. So this has their Part A here. This is liability insurance. They've got $250, $500 coverage, and $100 for property damage. So $250, $500, $100. That means $250,000 in bodily injury liability insurance per person. Max of $500,000 per accident for the total bodily injury, and then property damage of up to $100,000. And they've got medical insurance. This will cover you or your passengers up to $5,000. And they also have uninsured motor vehicle coverage. This is for bodily injury. I was, again, like I said, on another planet when I was talking about property, because that would be your collision or coverage that would cover that. But bodily injury of $100, $300. This is if the other party doesn't have insurance or doesn't have enough insurance, you are insured. That's fairly low. I think mine's higher than that. It would be higher than that. And then here they have collision coverage with a $500 deductible, and comprehensive coverage with a $500 deductible. They have emergency road service. So this is for the tow truck and whatever. You get a flat tire, maybe they'll send someone to fix it, or if your car breaks down, they come tow you. But they're not going to tow you. If you were like in Tennessee, they're not going to tow you home. They're going to tow you to the nearest repair shop. And then here's some discounts that our party has. Multiple line, that means they've got other insurance with the insurance company, and they've got like a, one of those things that starts honking away if someone tries stealing your car, and then a good driver discount included in this price there already. I've got links to a couple videos. Like I said, I might show you one right now, but my internet connection is on the spotty side at the moment, like you said. So consider watching, definitely watch. I've got this video and another video worth watching. They'll reinforce some of the stuff I've said here. Let's see. Oh, so you're going to go on a trip, some of you, and you're going to rent a car. Do you need the insurance provided, the expensive insurance that the rental car company will offer you? Here's where I would check with both your insurance company and your credit card company. So, and you might pick which card you use based on what you find out from here. So some credit cards will give you insurance, or property insurance. That's what you're worried about with the car rental, is property damage to the car, the rental car. You actually, when you're driving a rental car, your liability coverage carries over. So your liability coverage is not an issue, but what's an issue is, hey, you do damage, or that rental car is damaged while you have it. So check with your insurance company, ask them what kind of coverage you have as far as collision and comprehensive when you're driving a rental car, and then also check with your credit card companies and see what kind of coverage they have. So you likely can get away with having to pay for this high-priced insurance. So, excuse me. Florida, we're considered a no-fault law, so it's supposed to stomp on lawsuits and make it so, hey, if you need insurance, you get paid. You don't have to wait for the lawsuits to settle, and it does kind of work out like that, but there'll probably still be lawsuits. They just should get you payment and fight it out later in court, the insurance companies. Anyway, so that's kind of the idea there. It's supposed to make insurance less expensive, but I don't know that it really does that. All right, so let's put you back in the spot of insurance executive here. Let's say, which do you think would cost more to insure for liability coverage? Or actually, you're just thinking about buying a car. Which would cost less for liability insurance? This nice, fancy-looking sports car or this minivan? Well, this is kind of an easy one. You know, which one's going to be zooming around more? That minivan is likely to be zipping around a lot more. I mean, that sports car is likely to be zipping around a lot more than a minivan, of course. So the type of car, you know, if you're getting a sports car, etc., well, theft rates too. So some cars are, you can look up which cars are the most likely to be stolen. That's going to have a factor too in there. Obviously, where you live is going to be a factor as well, but I've got that right here. So who do you think would pay more for auto insurance? Someone who lived in New York City or someone who lived in Jay, Florida, which, if you don't know where that is, that's north of Pensacola, Milton area, basically, you know, middle of nowhere. So who's going to pay more? Well, that's an easy one. New York City people would pay more for auto insurance. They're going to look at where you're more likely to have an auto accident, obviously in this big city, where you're more likely to have your car stolen, this big city, where you're more likely to have vandalism, this big city. So all of that's going to affect your auto insurance rates. All right, another one of these thinking questions. Who will pay more for auto insurance? This 18-year-old or his 40-year-old mother? Oh, this is another easy one. Sorry, guys. Guys, young males, the highest risk auto insurance category there is. For some reason, they have a reputation of doing stupid things. So the auto insurance is priced based on things like age and sex. So males, dumber than females. Young males, dumber than old males. Sorry. And marital status. Hey, want to lower your insurance? Get married. You're suddenly deemed more responsible. I obviously look responsible with this hard hat. Credit history. We talked about this before. If you haven't already done so, now's a good time. You're trapped at home maybe. Check out Credit Karma and get that app. Sign up and see what your credit score is, etc. If you've been in 4 wrecks in the last 6 months, your cost is going to be higher than someone who hasn't had a wreck in 40 years. So if you drive for work 100,000 miles a year, you're going to pay more than someone who drives 10 miles a day. So you may be also entitled or likely entitled to discounts from your insurance company if you have some of the nice new safety features that come with cars. So we got my wife the new, it's a 2019. Anyway, we just got it not long ago. I think I told you that. Maybe a 2020 or whatever. I forget. Depending when they changed their model year. It's only a few months old. But anyway, so it's got the automatic cruise control that will slow down and even stop if the car in front of you slows down or stops. It'll keep you a nice distance away and you can pick that distance. You have a 3 choices on that. It will get upset if you're backing up and it sees someone coming from either side. Give you a little warning thing. It'll also spot if you're ready to thinking about changing lanes. If you're someone's in your mirror on that side, it'll warn you there. It'll also get upset if you try changing lanes without putting on your turn signal. It captures stuff like that. So anyway, those safety features should get you an insurance break. If you're insuring more than one car, your insurance company typically give you a break for that. If you're insuring your house with the same company where you're insuring your car, they'll give you a break for that. You got that nice stuff. I mentioned this just a minute ago. Alarm systems, that gives you a discount. Accident free, that gives you a discount. Good student, is where you want to be. Give you a discount for that too. So make sure you're studying for this next test so you can get your good student discount. We've talked about shopping around with other insurance items and shopping around in general. Auto insurance, definitely something you want to shop around for. Even if you find the best rate, rates do change. Check again periodically. Remember that Geico commercial, just 15 minutes could save you 15% or more. So check into that. So it is worth shopping around for insurance. If you are at fault in an accident, your rates may go up. There are different rules on that, but bad driving records will catch up with you. Just one last brief note here on what should you do at the scene of an accident. If you are in a wreck, number 1, don't leave the accident. If you're at fault in a wreck for whatever reason, don't leave the accident. That gets you in big trouble. Probably worse than any trouble you'd be in just for being in the accident to start with. So if you're in a wreck, get to safety. Most places, I'm not a legal expert here, but most places, if you're in, you can move your vehicle to the side of the road if you can. Get out of the road. Be very careful. Shoot, this is what terrifies me. A wreck on the interstate. I mostly worry about if I'm slowing down for a wreck ahead of me getting tailgated. So make sure if you're able to get to safety, get everybody out of the road, and stay safe. Because I also heard about someone in my spouse's school recently, I think got out to help somebody in an accident, was doing something, and somebody else ran them over. So watch out for the other people. Yeah, I know you may be shaken up or whatever, but if you're able, get safe first, and then do this stuff. Sorry for that long preachy side channel there. But you want to call the police, get names and phone numbers and everybody, insurance cards. You got your nice cell phone, so take pictures, give them copies of your insurance info, etc. Get info I mentioned for the people involved and for witnesses. And I put it again down here. Don't leave the scene of an accident. And then somewhere, after this, or as soon as you can, contact your insurance agent, and they'll, if it's your fault or even if it's the other person's fault, the insurance company will be in touch with the other insurance company and kind of let you know what's going on, and they can help you with the process, even if the other party is at fault. So they may be of help in this. So that was all kind of common sense, but do have your insurance card. Remember, in Florida, you must have proof of insurance. I try to, every 6 months when I pay for the new whatever updated policy, I try to stick the cards in the vehicle as soon as I can, but then I also have that app. So check to see if there's an app for your insurance agent. If you've insured through your parents, ask them about it. Make sure you've got your insurance card. That's something to run out and check right now. If you're stuck at home and just wanting to get out of the house, go check and see if you've got an insurance card. All right, so that was the end of auto insurance. So think about, I put auto insurance is boring until you need it. Most, I don't know what percentage of Americans get in wrecks, but I'd say it's a pretty darn high percent. I've been in one that was, I was the only one driving, and I think I was also rear-ended by somebody once. They did minor damage, and actually rear-ended twice by people who did minor damage. My spouse was in a head-on collision, not very good. My daughter's been down in Miami and was hit twice down there. Nothing too major, but still hassles and stuff. So, hey, based on my family, my immediate family, the odds of getting hit are 100%. But anyway, so you do want auto insurance. You do want to know what your coverage is. So if you don't know, hey, check it out. Once you're able, think about getting, I actually would say 100, 300, 100. I should probably change that 50, because 50 covers, one average or slightly above average new car, but damage more than one car, you're getting on up there. You can adjust your deductible, raise that, and that will lower your premiums. And remember to shop around. So that ends auto insurance, but be safe out there. And so, like, coming out of a cave, I'm not like a professional caver or anything, but I was hoping to do, we did several over Christmas and earlier in last year. I was hoping to make 2 different trips and do like 4 or 5 caves each trip, and probably still can do that this summer. But when you're in the cave, you got your headlight on, and then eventually, you get your light on, then eventually you see, there's light up there. There hopefully will be light at the end of our tunnels as well. We're not going to be back in face-to-face class this semester for sure, but I'm hoping by the time the fall rolls around, we'll be back in relatively normal. And you guys can drop by and say hi. But if you want to chat, let me know. There's a couple of things we can meet up online and talk. If you got questions, you can email them. Please do stay up, because as far as I know, I'm giving grades as normal, so you got to take tests. Be good, be safe.